Hey, this is Phil and it's your Friday video update. So unless you were completely out of touch yesterday, you probably heard that the Fed did not raise the federal funds rate yesterday. And as a reaction to that, the bond market shot way up. And what that means is there was some rate improvement yesterday. Many consider this to be a little bit of a knee-jerk reaction to the Fed move because it's just typical of what happens. But we did see some rate improvement, and the bond's up a tiny bit more today. But now we're bumping up against a level that really signals it's probably about as far as it's going to get. So what does this mean for you? Well, look, we got a little bit of a improvement in rates, not huge, but just maybe an eighth in rate in certain loans. And that's good news for a borrower who had not locked, although the advice had been leading into that move that it's probably better to lock because you never know what's going to happen when the Fed meets. But now there's some discussion about what's next. Well, the Fed basically said in their statement that they're really not inclined to raise the federal funds rate until they see inflation at or above 2%. And inflation is below that now. And so it's going to leave the decision really up to the bond market right now is how do they react to different economic news. And therefore, if there's some economic news that kind of signals a little bit of inflation, the bond's liable to react maybe a little bit more quickly because the Fed has shown that they're not willing to react. The Fed is not going to react to curb inflation until they see a real strong need, and their projections, some of them feel that it could be for quite some time. So could add a little bit more volatility to the market. It still remains to be seen. So for now, I would again continue to advise my clients that if they are happy with the rate they're being quoted, I don't think this is a market to play around with. Yeah, we might have some ups and downs, but trying to time those and figure out the best time to lock probably isn't a real good strategy. So for now, I would advise my clients to let me quote you. If you like the rate you hear, I'd go ahead and get locked in. And that's good sound advice moving forward for the foreseeable future. As far as the TRID is concerned, I'm going to mention this really up until the bitter end. We're now just about 2 weeks away from the implementation of the new TRID guidelines. So please make sure you're taking advantage of the information that I've put out there. And if you have any questions about anything you read or hear, please feel free to call me. Thanks for listening. Please forward and share this to anyone you think might find it helpful. Give me a call if I can help you with any of the clients that you may be dealing with here in the upcoming weeks and months. And I'll talk to you next week. Have a great weekend.